the issues are not that big. I'm trying to think if the growth triggers are strong enough for Indian markets, whether it's the large cap indices or specific portfolios, to show very strong earnings growth as well as therefore capital appreciation. Is there a case for that, or currently it's in cricket parlance a swinging wicket and it's better to safeguard the wicket as opposed to try and make runs?
Yeah, so after 4 years of strong growth, this kind of growth in earnings is hard to replicate, right? We are getting some base effect in place now. And as I said, as economic indicators are slowed down, it will start impacting corporates. We are seeing even in consumer sector, a lot of fair amount of weakness. So yes, you're right, that one has to be, I would say, keep a balanced approach. One needs to now look at closely asset allocation, maybe start looking at even more balanced approach. Avoid real pockets of exuberance, which are in small caps and micro caps and all, and be more tilted towards large caps. And avoid sectors with a lot of exuberance.
Oh, okay, avoid sectors with lots of exuberance. That would mean a lot of sectors. Ramesh, I'm trying to understand this. Okay, so let me try and understand first. Is the portfolio strategy a bit of a barbell approach, wherein you're probably veering towards pockets of value, but at the same time, because you guys follow this approach, right, of having an opco and a finco, and therefore your valuation models are different than what the street might usually follow. So I'm trying to understand, how is it that you're building out the portfolio currently?
So see clearly, where we see opportunity is in BFSI, in pharma and healthcare. Our technology, we are more neutral. We are clearly seeing, and then there are pockets of very high growth in India, which is basically, or I would say, a lot of tech-led businesses. Some of them have gone public in the last 3-4 years in the markets, right, where there is very strong growth. And then there are strong pockets of growth, let's say in electronics manufacturing, on the power side, and of course, select jewelry retailers. And then there's an odd company like in apparel retailing that's growing very difficult to understand in this kind of economic environment to grow at those rates. So those pockets of growth where the growth is very high in India, those of course, valuations while are not cheap by any measures, but still tolerable. While value is clearly there on the banking side, on pharma, on IT is also, if growth comes, value is going to be there in IT also.